Welcome to a new part, everyone. In this full part, we are going to break down chart patterns. But before we jump into the other lessons, I want to give you an introduction on what chart patterns are. So in this video, we are going to break down what are chart patterns, how do chart patterns help us, different types of chart patterns, and how to trade chart patterns. Now, first and foremost, what are chart patterns? So a chart pattern is price formation within a chart that showcases what price might do next based on what they have done in the past. So chart patterns can form over any time frame, monthly, weekly, daily, and or intraday time frame. So chart patterns basically help us with the following. Chart patterns help us find high probability trading opportunities. Chart patterns help us identify what direction the stock may possibly go to next. And chart patterns also help us assess market conditions for that stock or for whatever security we're looking at and manage our risk. So for example, to give you guys a better idea, this is what a chart pattern looks like. This is one of the chart patterns that we are going to cover in the upcoming lessons. This is a double top chart pattern. Now, what a chart pattern does is we identify the chart pattern, which gets us ready for the anticipated move. So whenever there's certain chart patterns that formulate, and those formulations showcase us what will most likely happen next. So for example, in a double top chart pattern, what it tells us is when the stock hits two similar highs and breaks the neckline, and I'm going to break this down in the upcoming lessons, there's a high probability that this stock may go down. Us seeing that chart pattern and being able to recognize it allows us to anticipate the upcoming move and take on the trade. Short, put our stop loss, capitalize on the trade. That's what chart patterns help us do. They allow us to understand what's happening within price action, what's happening within the price context, and they help us become more aware of what may possibly happen next. Now, a lot of people trade chart patterns and they actually do it the wrong way, and they lose a lot of money by not understanding everything they need to know about chart patterns. So the number one mistake a lot of traders make with chart patterns is that they trade chart patterns in pure isolation, meaning they don't look at anything else, they just look at chart patterns, and that is the number one mistake a lot of traders make. I'm pretty sure some of you guys that have traded before, you've traded chart patterns and multiple times they have failed. It's because you're trading them in isolation. So the way it works is a lot of people see a chart pattern, they're like, oh, I just identified this pattern or I identified that pattern. As soon as they identify that pattern, they execute the trade, they take action, trade placed, and they end up losing money a lot of the times. That's not what we're gonna do. We're not going to just look for chart patterns, and the moment we see one, we're not gonna go and trade it. Right now, how are we going to trade chart patterns, and what is the proper way on trading chart patterns? Now, the proper way to trade chart patterns is number one, you see a chart pattern forming or it is spotted. So you see a chart pattern, you look at a chart, you're like, okay, this stock is forming pattern ABC or whatever pattern that you may be seeing, right? Once you identify the pattern, what a lot of people do is they skip all these steps. They skip every single step in between, and they just place the trade. That's not what we're gonna do. We're gonna identify each step, and then we're gonna take the trade. Why? Because we wanna have the highest probability for the trade to work in our favor, right? So the next step is we would check the chart pattern's quality factors. Now, what do I mean by quality factors? This could be such as looking at volume, right? Is it a strong break? Is it a strong move up? Is it a strong continuation? And you guys are going to see when we go over the upcoming chart patterns, you'll see what I mean by the quality factors. But looking at the quality factors, which could be something like volume, the trend, the direction, all these things are extremely important, right? The next thing we would look at is we would check higher time frames to see if there is synergy in the trade idea. So for example, let's say we look at a 5-minute chart and we see a certain chart pattern, right? Or let's say when we do see it on a 5-minute chart, on the 5-minute chart, the chart pattern is telling us that the stock may possibly go down. But when we go to, let's say, a 30-minute chart, right? And we're gonna go over multiple time frame analysis in part 5, and you can combine it there. But when we look at a 30-minute time frame, we might see that this chart pattern actually looks very weak. So we wouldn't take on this trade because when we look at the bigger picture, we see that this chart pattern on a smaller time frame is actually pretty weak, right? Next, evaluate market structure to see if the trade idea fits current context, right? We want to look at the market structure. We want to see that, hey, this chart pattern that we see for stock A right now is saying that it's going to go high. It's going to go up. Now, when we go to, let's say, a higher time frame, right? And when we look at the market structure and we look at all these things combined, does the stock have a high probability of going up when we look at everything else? No, it doesn't have a high probability of going up, so I don't care about this chart pattern. This chart pattern may possibly not work. And in the last video of this part, I'm gonna show you real live examples of walking through all of these steps so you can understand what I mean by it. But once again, looking at these factors are very, very important. And then finally, if let's say you look at a chart pattern and you see a chart pattern forming, the quality factors line up, you look at the higher time frames, everything makes sense. You evaluate market structure to see if the trade idea fits current context. That makes sense. You then plan the trade and commit to the trading plan. So you make your entry point, where you're gonna buy, where you're gonna short, where you're gonna exit, what's your profit target. These things have to be established. And then once this is established, you are now allowed to take on the trade. Now, if you notice something, once again, we have multiple factors that we are looking at. Majority of people look for chart patterns, get super excited. Yay, I found a stock, I found a chart pattern. And they place a trade. And that's why a lot of times you'll notice that for people that have traded already, that the chart patterns don't work. Because you're not looking at the quality factors. You're not looking at the higher time frames. You're not evaluating market structure. You're not looking at all these pieces that need to be looked at to properly understand, will this chart pattern work? Will it not work? Does it even have a high probability of working, or does it not? Right. Now, some rules for chart patterns, just to keep in mind. Rule number 1, chart patterns don't always work. Keep this in mind. They do not always work. Like, print this out, paste it somewhere. They don't always work. Chart patterns don't always work. They work when the context around price structure is set up properly. They give you a higher probability of working when the context is set up the right way. Right? Just because you see a certain chart pattern, don't say, oh, I see this chart pattern, let me take on the trade. No, go step by step, analyze the trade, then take on the trade. Even if all the steps do align, there are some times that the patterns may actually fail. That's why we are aiming for probability. But to get the highest probability, we want to go through the steps. Even if you go through the steps, there are times where they may not work. And if they don't work, you cut your losses and you move on. Rule number 2, trading chart patterns on its own is a very weak signal. Like I just mentioned, if you just trade chart patterns by just seeing a chart pattern, you see a chart pattern and you place a trade, that itself is a bad signal. Chart patterns are awesome to use, but they should not be the first or only factors to you making a trade. You need to look at all of the steps that we went over to properly analyze the trade. Rule number 3, understand the patterns instead of remembering them. Don't sit down for hours trying to memorize each pattern. Instead, focus on understanding them and applying them to real charts, because every chart formation will look a little different but will have the same idea behind it. Another mistake a lot of people make is they try to go and remember the patterns. They're like, oh, this is how the pattern looks like. This is what I need to look out for. No, you need to understand what the patterns mean. Why does it showcase that a stock's going to go up? Why does it showcase that a stock's going to go down? All of these things need to be understood instead of memorizing them, because all of the chart patterns are not going to look the same, but they will have the same idea behind it. For example, once again, understand chart patterns instead of remembering them, right? Understand the storyline. This is a textbook example of a chart pattern, Head and Shoulders chart pattern, which we will cover in the upcoming videos. Now, on a real chart, it'll look a little bit different. If you look here, Same concept, right? Same concept, right? Same exact concept, but it doesn't look perfect. So if someone was looking for a textbook version of it and they would memorize how this looks, they would completely miss the pattern. But for the person that understands why this pattern is showcasing that the stock may go down, he or she will actually be able to recognize the pattern and recognize the proper high probability trade. Now there's three types of chart patterns. First chart pattern is continuation patterns. These patterns represent that the stock will continue its trend. So continuation patterns can be something like this. A stock is going on, let's say, a continuation pattern would showcase, let's say, a stock is going on an uptrend. It takes a break, and then it continues the direction. That's a continuation pattern. Next, we have reversal patterns. Reversal patterns indicate that a stock is going in one direction, and once this pattern formulates, that direction has now reversed. And then we have bilateral patterns. These means that the stock could either go up or it can most likely go down. The move could happen either way, right? So there's three types of patterns. I will break each one of these patterns down in the upcoming videos. Now, before we go into the next videos, the last thing, mastering chart patterns. To become a master at trading chart patterns, you have to be able to recognize the patterns as it's forming and be ready to execute. Right? If the pattern already formulates itself, it's too late now. So you have to be able to recognize the pattern as it's forming, as it's showcasing that there is a possible pattern. There's this pattern or that pattern, whatever pattern they may be. You have to be able to recognize that. That takes time and a lot of practice. But the whole idea is this. Number one, pattern is forming. This is where you should recognize the pattern and be ready for the entry signal. We do not have an entry yet, but this is where the pattern is forming. This is a pattern that we will go over in the upcoming videos, but as you guys can see, the pattern is formulating. This is a bear flag. What a bear flag says is the stock makes a move down, takes a break, and continues, right? Now, right now, we don't have a trade. All we know is the bear flag is forming. The trade kicks in if it can break that point or it can break that point. So we, at this point, are ready to execute the trade if the stock does what we want it to do. What we wanted to do is we wanted to go below these levels. We want to see a strong red candle breakdown with increased volume that showcases sellers are stepping in, right? This is where we start putting everything together. Boom, what happens? It breaks that point and it breaks this point. Look at the candle, strong red candle. Let's just make an assumption that volume is high, which is a good sign. This is where our entry signal kicks in. This is where you enter the trade because you now have a signal to take on the trade. This is where you say, all right, I'm going to short, right? Let's just say I'm going to short, put my stop loss there, take on the short position. I was watching the stock. This is where I was aware. Now it came and gave me an entry signal. I am now going to take on the trade. And then once you take on the trade, you manage your trade. This is where you manage the trade and look to take profits or continuously keep riding the move. This is the move. You either take profits or you keep moving your stop loss down, whatever you want to do, however you want to manage the trade. But these are things that have to be able to be recognized, and we are going to go over managing a trade in the upcoming lessons so you know how to manage a trade once it presents itself to you. Now, as I mentioned, chart patterns are very, very important, but they don't always work. You need to look at the criteria. To be able to get better at trading chart patterns, you need a lot of screen time. You need to be able to recognize a lot of different patterns over and over and over again, and these exercises will help you become better and better. In the upcoming lessons, I'm going to break down different chart patterns, and then at the end, I will put them together, show you real examples, and start showing you how they're going to work, how to enter, how to exit, when they don't work, and all of the good stuff.